Is gap insurance really necessary? A lot of people think that gap insurance is just another dealership scam because of the crazy high prices and negative connotations that come with the way the dealership sells it. Today, I'm going to tell you exactly why gap is so important for some of you and what you should be paying. First off, what is gap insurance? For those of you who don't know, basically this is covering the gap between what insurance would pay if you totaled your vehicle or if it was stolen and what you actually owe. A lot of times we drag negative equity into a loan, we don't put a down payment, we overpaid for the car, or it depreciates really fast right after we buy it. And what we paid for it and still owe is not exactly what the insurance company is willing to cover. This is why gap insurance is here. It's going to cover that gap. So here's a little example. Let's say that you were buying a vehicle from a dealership and you agreed to $30,000 out the door. If this was a brand new vehicle, it's going to depreciate 20% the moment you leave the dealership lot and sign those papers. If it's a used vehicle, maybe a little less, like 15%. Either way, the 15 and 20% that it's depreciating is what the insurance company is going to value your car at. So let's say you left the dealership at 30 grand and you got totaled right on your way out of the dealership. You right out the gate, if you don't have gap and that happens, you are going to be on the line for a difference of what the insurance company is going to cover, even with full coverage, up to what you actually paid for the vehicle. There is a gap there, and that's what this insurance covers. So how do we know if we even need gap? Well, let's just say, for instance, you went to the dealership, new or used, and you didn't negotiate at all. You got the full asking price from the dealership. You didn't put any money down, and you added your taxes and fees to that full asking price. Chances are good you're sitting at like 110 to 120% loan to value as you leave the dealership. The loan to value is exactly what it sounds like. How much was the loan compared to the value of the vehicle? If you're at 120% loan to value, you want to get down to 80% before you won't need gap. Anything over 80%, I would say, is a very good candidate to get gap. So how do you know how much to pay for gap? Well, right now, most of you are aware that you can get it right through your insurance company for a monthly payment. And of course, the dealership sells it for anywhere from $600 to $1,500, depending on where you're shopping. This is why a lot of us hear bad stuff about gap, is because the dealership tends to take advantage of people when they purchase it. So in my professional opinion, anything over $600 for gap is not worth it. And I would simply tell the dealership, if they're trying to charge you more than that you're going to get it at your credit union or through your insurance company, and you're not interested. With so many of you dragging negative equity into the loan, or even buying a vehicle at full price, sports car, a luxury model car, they tend to depreciate really fast. In other words, there's a ton of you that are candidates for gap. I hope this information helped you guys, and for more information just like this, please follow Billy the Car Kid.